Ivan, sort of walk me through, if you agree or not, with Guggenheim sort of bringing up the target to EBITDA positive profitability now at 2021 instead of 2023. What do your models suggest?
Yes, I do. I think that the growth rate of revenue, and there are a number of great marketing initiatives that they have undergone, could make the company a lot more profitable a lot sooner than people think.
What are some of the other main drivers that you see that's behind your buy call?
Sorry, you broke up there. We don't have a good connection.
What are some of the other main drivers that you have? You have a buy on the stock. What are some of the key positives that you see about Lyft?
The biggest opportunity is the overall gaining of market share in the transportation market. There's about $1.2 billion spent per year in ground transportation, and transportation as a service of what Lyft provides is going to increase as a percentage of that total spend. Also, Lyft is addressing a tremendous opportunity in healthcare transportation services for people who could not get to a doctor on their own, and in many cases, medical insurance or the doctor's office pays for you to get a ride from Lyft to come to the doctor or to the hospital for treatment.
Well,
non-emergency treatment.
Right. Well, I really like that you brought that up because indeed we do know that Lyft now provides Medicaid patients in Arizona, provides transportation, as you were mentioning. And I wonder how much of that is actually now part of a future growth opportunity for Lyft that maybe a few years ago we hadn't quite thought that that could be included when we're thinking about where this company could go in the future.
I think the healthcare transportation service opportunity is tremendous. And I like the fact that Lyft is focusing on that and not really focusing on food delivery. I don't really think food delivery has a large margin or a huge opportunity. It's great for the customer to be able to get things delivered on demand, but not for the service provider. I think that the opportunity in the healthcare service transportation is huge. Also, Lyft has a number of other key initiatives. They are the official rideshare provider for Disney in both California and Florida. They also have now a partnership with Hilton, where you can earn Hilton rewards points for your Lyft rides, as well as with Delta, you can earn Delta miles from Lyft. I think those are just great marketing opportunities.
Well, Ivan, when you bring up that they are doing a good job of staying away from food delivery, I have to say that sounds sort of a lot like Uber, for example, which we know part of its valuation and the high valuation of Uber was its diversification. It had international growth. It had food delivery. So I guess I'm asking, does it make sense for Lyft to stay in a targeted, sort of simplified one-track strategy versus trying to go Uber's route of being a big diversificate, sort of having a lot of diversification when it comes to their revenue?
Well, I don't think there's a lot of opportunity. I think there's potential opportunity to deliver food, but I don't think it's a very profitable opportunity. And I think medical service or healthcare service is a profitable opportunity. Partnering with airlines to be the preferred provider is a huge opportunity. With hotels is a huge opportunity because more people are renting cars less when they travel and relying on services like Lyft to get around when they go to when they're on a trip, either for business or vacation.